Welcome back. You're tuned into Bazaar Morning Call. Well, as promised, we have Dipan Mehta, Director at Elixir Equities, who joins us on the show. Hi, Dipan. Good morning and good to see you. Well, I wanted to ask you about the stock of the final hour of trade yesterday. Sun Pharma, the street first looked at it. They liked those numbers and the stock ended virtually at the high point of the day. But now we have the con call details as well. Your view on the stock at these prices?
Yeah, Nigel, good morning and thank you for having me on your show. See, I think Sun Pharma has a great long-term story and they are following a differentiated business model, which means they are focusing on specialty products. And of course, there'll be some speed bumps as they go along. But end of the day, it's a very sound strategy in a situation where a lot of the markets, the formulation business is getting highly commoditized. And on the whole, I think that once they have more product launches and they do geographical expansion of those products as well, this could be a sustainable growth momentum for the company. And eventually, I think investors will start paying even higher valuation for such a business. So I'm very positive on Sun Pharma. A disclosure we and our clients are invested in it. Valuation wise also it's reasonable. And I think that they're getting a nice upside at present because of a certain situation in the US generic market where price erosion seems to have got a little reduced as compared to maybe 2-3 years ago.
Okay. Dipan, hi, good morning. I wanted your thoughts on Jubilant Foodworks because finally after 4 quarters, Domino's growth has, improved. So I think that's something that the street perhaps will like. But your thoughts on the numbers?
Yeah, good morning, Sonia. But same store sales growth is flat. And a lot of the growth has come from new store openings and there's only so much of expansion that they can do. We really like to see same store sales growth to improve. Of course, they keep saying that because they're adding stores closer to the existing ones. Therefore, the SSG is not as strong as it expected. But nonetheless, I think it's a good story. But look, a lot of the positives have got captured in the stock price. It trades at a very rich price to earnings multiple, which perhaps doesn't justify this kind of a high PE multiple. So I would just say wait and watch as far as Jubilant Foodworks is concerned. And end of the day, I think, it's basically a single product company. And that also is a bit of a risk factor.
What about Nykaa? Because, the performance was good. I mean, revenue growth of almost 30%, EBITDA up 32%. But I think this is something that the street knew, right? They gave us the updates a couple of months ago. Your thoughts on this stock?
Sorry, I missed the name, Sonia.
Nykaa.
Nykaa, yeah. No, I think it's following through on its business plan and it's executing pretty well, I think. The entire category is growing pretty well and we are seeing a lot of traction over there. But, I don't want to buy a company where profits are as minuscule as they are. They're just about breaking even. We want to get into consumption-related businesses where there are solid profitability. It's getting over there, but it's not yet there. So I would also place Nykaa on hold for the time being.
Okay. Well, Dipan, just a quick word on Medanta, if you have a view. Stock's down some 15% in 2 days after results. Do you like it? Do you track it?
No, Prashant, it's a new listing and I'm just waiting for the stock price and the performance to settle down. But generally very positive on hospital companies and these are secular growth stories because healthcare consumption, healthcare costs and healthcare spending is going to keep on moving up in a structural way as and when there is more awareness. So generally positive, but not had a look at Vedanta that closely.
Dipan, the big talking point, of course, globally is NVIDIA, right? And the kind of surge that it's seen post its numbers. But sitting here in India, how does one participate in this rally? I mean, there are many mutual funds that give you an exposure there. But what would your best advice be?
See, Sonia, the best way to play US tech and tech and overall US economy is the Indian software companies. Of course, I think this quarter numbers have been a bit disappointing. In a way, the quarter is a washout because more or less, I think results were flat to declining. But there is a ray of hope in the form of higher order book position, which means that once things start to improve over there, execution will immediately pick up on the Indian software company side. And that could lead to very good numbers, maybe December quarter, March quarter or so. And this entire AI and cloud, I think that's another going to be another structural spending increase for all Fortune 500 companies globally, and that's going to benefit Indian tech companies. And these are companies which have got great shareholder-friendly policies in terms of distribution of profits and great operating leverage businesses as well. And valuations are still reasonable for these companies. So if you get a few of the even large cap or mid cap software companies, I think that's the best way to play this technology surge and increase in tech spends globally.
Okay, all right. Dipan, I wanted your view on the insurance space. You know, HDFC Life, there's a Motilal Oswal note that's come in early this morning, and they're talking about HDFC Life. They've upgraded the stock to buy from neutral. They're saying that the stock is down 20% in the last 5 months, and the de-rating of stock has been steeper than expected. And the valuations they highlight at around 2.2 times, well, it's the lowest in January 2023. Any view on this one, HDFC Life?
See, Nigel, I think insurance has done very well in this quarter overall. But you look at LIC, and when I look at LIC, I don't feel like looking at any other insurance company. It's available at below its enterprise value. The way the stock prices have moved up, LIC's portfolio would have done exceptionally well. And a lot of the gains and increases in the enterprise value do come from portfolio gains. I think in terms of actual performance also, it is coming through pretty well. It's able to hold on to its market share. And valuations, I think, are very, very attractive. So, and PSU is the flavor of the season, has been so for the last 2-3 years. So from that point of view, I think LIC is the best bet in the insurance sector. A disclosure we and our clients are invested in, so our views could be biased.